Well, along with trade talks picking back up, the Fed is expected to announce a rate cut on Wednesday, and then there's that July jobs report on Friday. Joining me now, Chairman of Laffer Associates and former Reagan economic advisor, Art Laffer. I know, is there some other thing that comes with that thing, the presidential award? I mean, I know, and if we were in England, we would call you Sir Art Laffer. There's got to be something else that comes along with that.
I love it, Charles. I love it. Please. No, it was just the most wonderful day of my life, to be honest with you. It's okay. I'm still not over it. It's amazing.
I can imagine, Art. Now this China trade situation, the White House felt like they were 90 to 95% there. They send the report, they send the agreement over, it comes back all marked up like one of my high school term papers. And it feels like we're starting from scratch. How do we handicap this going forward?
I think it's going to happen, to be honest. It just makes no sense for it not to happen. It's good for China. It's good for the U.S. It's good for everyone. But these are the negotiations, and you will have those ups and downs. And I have a dollar bet with Bob Woodward that we'll have a deal within 6 months, and I have another dollar bet with Bob Woodward that we'll have a deal within 12 months. So I'm expecting to win both of those bets. But, you're going to get ups and downs, and it's not there yet.
Art, Mitch Rochelle, is the reason why you're going to have a deal, or we're going to have a deal, and you're going to have a dollar in 6 or 12 months because this administration wants to have something that they can claim victory around, and that deal may not be a huge deal, but it'll at least be something, whether it's agricultural products or some agreement on Huawei, perhaps. Is that what the near-term plan is?
Well, I think both administrations. I think Xi is in trouble in China and would love to have a deal over there. I think it would be very good for him. And I think it would be very good for Trump to have a deal as well. Now, I haven't envisioned this happening in pieces, one agriculture, one Huawei, one other. But that's always possible. I mean, I don't see why it wouldn't be possible and why it wouldn't be good for both countries. But both countries want a good deal. It's a win-win for everyone in the world. I mean, this is what we refer to in economics as the gains from trade. And any of these barriers we can reduce and bring down makes everyone in the world better off. And the only problem with these deals is they have internal domestic politics to deal with. China has domestic industries to deal with that are tough, and so do we. I mean, the steel industry doesn't want a great deal, and there are a lot of industries that don't want it, and it's tough to make it happen.
Art, former Federal Reserve Chair Janet Yellen now endorsing a quarter-point rate cut, saying the global economy is weakening because of trade conflicts. Of course, it feels like the Powell-driven Fed is more concerned about this arresting low inflation, and it getting out of control. What do you think the Fed should do on Wednesday?
I would, if I were the Fed and just me, I'd reduce the discount rate by 50 basis points. I think they made a mistake the last time they raised it, which was quite a while ago, and the market took a big tank on that. And I think it's really worthwhile. Now, the reasons I give is that the U.S. is in a good shape, but it could be we don't want to break the momentum. And the one thing that bothers me in this whole world economy is the weakness everywhere else except the United States. And, when everyone else is weak, Charles, that does pull us down some. And I think we've had a great GDP growth. I think the 2.1% is fine. And I think the rest of the world is in real trouble. And I think a U.S. rate cut would help the rest of the world as well as the U.S.
Hi, Art. Jack Howell from Barron's. I think everyone's looking for a rate cut now. You say,
hi, Jack.
Hi. You say 50 basis points. So the question is, how low is too low? Do you worry about us chasing Europe and chasing other countries down, closer to zero, that when that next recession inevitably hits, that we won't have enough ammunition to fight it?
Well, I don't worry about the latter part, that we won't have enough ammunition to fight it. I don't think this is the right way to fight it. But the Fed has done the discount rate, has followed discount rates, has followed markets, not led them. And the markets are down. Interest rates are way down from when they were raised the last time. And I really think the Fed should just follow markets down and just keep in sync there. That's what they've always done, and they've broken the tradition in the last 6 months or so. And I think they should realign that tradition and just lower rates. It would help the world economy substantially. It would help equity values. And there's nothing wrong with helping equity values, believe me when I tell you. The markets precede good economic growth, and I'm expecting good growth. And if they did that, I think it would be very helpful.
All right, I want to talk about health care in America because Senator Kamala Harris unveiling her health care plans this morning. She's looking to transform the system over 10 years into what she's calling a federal one. It will allow for a limited role for private insurers. Fellow Senator, of course, 2020 hopeful Bernie Sanders has also touted his Medicare for All plan, saying it will slash health care costs with a tax hike. I know it's early for you to crunch the numbers with the Kamala Harris's plan, but overall, the notion of a government-run system that you know, prices are down, there's no premiums, things like that, is it even economically feasible?
Not to my way of thinking. I mean, obviously it's feasible in the sense that, you know, if life expectancies drop and people get rationed by their doctors and all that sort of stuff, which happens in other countries, I don't think it's a good system. I'd like a private system here. I think there are three things we really need for health care, Charles. We need catastrophic insurance. We really do. Now, some people can afford it, some people can't, but those who can't should be able to get it from the government, period. Number two, we need transparency. We need to know what it costs to get medical equipment, medical treatment, and what the qualities are of that product that you're buying, doctors included. And then lastly, we need low-income health care. I mean, we have soup kitchens, we have homeless shelters. We should have free health clinics for those who really can't afford anything and make sure they're done properly. But other than those three things, I don't think there's any reason for government to be involved in health care at all. It's no different than housing, for food, for school, for anything else. People should make the choices they want of their products, and it would be run a lot better. LASIK surgery is improved in quality and dropped in price because it's a free market. Plastic surgery, the same thing. We need free markets in medicine, right, and that means transparency.
Well, Art, you laid out some good ideas there on health care. You're one of the only guys on the right I hear laying out a plan, though. You've got actual specifics of what you want to do. Why aren't some of your friends on the right being more specific about what they want to do on health care?
Well, let me just say that I think the president has laid it out very clearly. Surprise billing, he's put out an executive order on surprise billing that's really great. He's put out an executive order on transparency, on doctors' quality, and on pricing there. And he's looking up for an executive order on medicine, too, pills from medicines from abroad, most favored nation. Those are three major foundation pieces, I think, for a Republican pro-growth health care plan. So I would say the president's there. I don't know why my colleagues in economics aren't. I mean, they're sort of silly from time to time, as you know. But this is the way you should do it in healthcare.
Sir Art Laffer, thank you very much. We appreciate it. Thank you.